Capital gains tax. Capital gains tax is separate to income tax. It is payable on asset sale or house sale. Let's just look at the allowances and the tax implications of each. So let's look at selling assets first, then property. You have to consider several things. The first is all people in the UK have a capital gains tax allowance, a bit like your personal tax allowance. That's at £12,300. So any gains beyond that are taxable, but anything beneath that is tax-free. Then you've got to consider where you are as a taxpayer. So looking at the tax that you pay as an individual, obviously you start down here at 0, and then you go through the nil band, you go through the 20% band, the 40% band, and then into the 45% tax bracket. Now these are income tax bands, so don't get confused with that. But what does happen is there's a tax liability associated with this under capital gains tax, depending on where you are. So below the 20% threshold, you pay 10% tax on asset sale, and above the 20% threshold, you pay 20%. If you're selling property, that sits slightly separately. That's taxed at 18% below the higher rate tax threshold, and then 28% above the threshold. Now these threshold bands, just if you don't know, going up to the 20% threshold, that's just about £50,000. As you get to the 40% threshold, that's 100,000, and then this threshold here is 150,000. So that's how the tax position would sit for any sale of any asset, be it an asset portfolio, stocks or shares, or a property. So let's look at what that could look like. Let's say you had, keep my maths simple here, £112,300 of a gain. So let's say you had an asset, you bought it for £1, and it went up by £112,300. So that's your total gain. It's not the total value, it's the difference between the purchase you paid for something, the price you paid for something, and then the sale price at the end. So let's look at this. What would then happen? You remove your capital gains tax allowance at £12,300, so that's tax-free. Then the remaining balance is taxable, so this 100,000 is taxable. And this is where we need to analyse with your personal tax return. You fill this in through your personal tax return, your self-assessment at the end of the year. And then it determines the tax that you pay depending on where you are in your tax cycle. And that's effectively how capital gains tax works.